All right, I made it back. Had to hop off for a minute. And I'm back. Let me get set up. So much to do when you go live, guys. I gotta remember to turn my notifications off. I gotta get my little graphics. Gotta make sure I'm ready. It's a lot. Hi, Laura. I will be honest with y'all. I just watched The Social Dilemma, so I'm feeling kind of weird about Instagram and Facebook and everything right now. I highly recommend that you watch it, but I'm trying to figure out how to run a business officially without being on social media now. So it's going to be interesting. But we have a really great question today. We have a 28-year-old asking, what should they do with $30,000 to $50,000 that they want to invest? Like, where do you start? So, you know what? Let's get into that. Oh. Let me take this down so y'all can see me. So, 28 years old, want to learn to invest. Well, my answer is not going to be throw it all in the market. If that's what you're hoping, I'm not going to get it here. Sorry. What I believe that you should do is you should invest in your financial education. So that means you need to know, do you have a spending plan, aka a budget, something that's going to keep you spending responsibly? Have you set your goals? Do you know why you're investing? Like, are you investing just to make money? Are you investing for retirement? Are you investing to kind of get a return that'll be used for a house? Set your goals. You also have to know your risk tolerance. And what that means is investing is risky. The one thing you'll see on every investing account, investments are risky. You could lose it all. Are you prepared to lose it all? Questions. You need to learn about investing. Like, what does that mean? What types of assets are you investing in? Do you have the right type of account to enable you to invest? And last but not least, your behavior. Your behavior matters when it comes to investing, because psychologically, it's very hard to run to something that's doing bad, and it's very easy to run to something that's doing really well. For example, during quarantine, Zoom has been doing very well, or Tesla has been doing very well, or Amazon has been doing very well. But Amazon is over $3,000. Now, before quarantine, Amazon was like $1,300 to $1,700. Zoom was much cheaper. Tesla was $250, and I was still like, that's too high. Now we know it excelled into what it is now, and then stock split. But it's hard to run to something when they're doing bad. But that's what we need to be doing, and researching and knowing yourself and knowing your risk tolerance will help you do that. The more you know, the easier it becomes to invest, as long as you can control your behavior. So other than investing in yourself, when it comes to financial education, there are a lot of books out there that you can use to learn about the types of investing you want to do after you set your goals, after you tell yourself, okay, I'm just in it for a short time, or like me, I teach long-term investing, like years upon years before you need to touch this money. You can also get I call them fiduciary advisors. I don't necessarily want you to have a financial advisor, a fiduciary. I need somebody who's going to be acting in your best interest and not thinking about them, the sales, the bottom lines, all of that. And I also have a blog post about that, how to interview them to find out whose side are you really on. Free and cheap. You can get a group of friends together that is interested in growing their money and rethinking, more thinking long term, I should say, and wants to invest. And you guys kind of collectively learn together. You can do your research. It's going to take a lot. There are a lot of great people on Instagram. But here again, you have to know your goals. You have to know, okay, is this person talking about day trading, which is short term? Or are they talking about long term? Because they will lead you astray if you're hoping to long term invest and they're saying sell. If they say sell, they're short term traders. If they say buy and hold and never sell, they're long term. Also, the one thing that I recommend when it comes to wanting to learn to invest is to grab a piece of paper and create a stock watch list. I've actually created one for my clients, the people that go through my investing basics course, and my wealth tip email list actually sends one that you watch the stock market. You look around your house, you look at your bank account, find out where you've been spending your money, and you find out what stocks those are. And you watch them for a few months. That'll help you learn your behavior. Are you okay with these market shifts, dives, swings, whatever they call it? Hi, guys. Welcome, Miss Sunflower Curls and Jackie. We have a 28-year-old who wants to invest $30,000 to $50,000, and they're trying to figure out where to begin. Y'all know me well enough to tell them they need to learn what they don't know and research. So I was just letting them know that they need a stock watch list. They need to start looking at the market, hear the news, see that, okay, one bonehead talks bad about the company can kind of tank the stock a little bit, but it's only for that day and then it goes back up. So it keeps you from panicking and keeps you from, overreacting and just stopping. Hello, Miss Rocio has entered the building. Welcome. So once you've gotten to the place where you understand investing, you know what type of account you need to invest, you know what you want to invest in, all goals you got to set, because you can invest in bonds, which are loans, stocks, equities. You can invest in index funds, my favorite thing, because it's just a collection of lower fee stocks. Then once you've gotten your portfolio together, you want to continuously review the portfolio. Now, if you're risk averse and it's like a heart attack having to go in and look, then maybe you do it once a quarter, so every 3 months. If you have the higher tolerance, you can do it every month. And I think this week I will be posting a reminder to review September's portfolios. I will post one of my stock accounts and tell you, okay, you need to find out what the benchmark is so you can find out, okay, how is my account doing? It looks like it's doing good, but if you don't know how the rest of the market is doing, that's like running track and thinking you're doing something and Usain Bolt's on the same field running the same race with you. You're not doing good. You need to know who's on the track with you. So I will post that so you'll know and remind yourself, okay, let me go into my 401k account and see how it's doing. Other than that, I've written a blog article about this. So if you want more information on what you need to do and where you should begin if you're looking at investing, check out onmyownfinancial.com/blog. And of course, I have another grant for you. The Wish Local Empowerment Program is offering like 4,000 Black business owners grants and funding. I want you to go check out wish.com and see if you're eligible for it. I think what I saw is you need to have a brick and mortar, but double check me on that. And Last but not least, I definitely want to shout out my shirt. I love it. It's from a new Black-owned company called Black Forward. It's really amazing. Please check them out. I believe they have an Instagram, and they definitely have a website. But it's such a comfortable shirt, and yes, so I hope you have a wonderful Money Monday. I just kind of jumped into it. In case you're new to Money Mondays, I'm Jayla. I'm your wealth best friend. I'm here every Monday at 12, helping you, answering questions that you may have about estate planning, getting your legacy together, investing, debt, mental health, all of the things, that we need to handle. I will definitely be posting all this and the video to my feed so you can watch it anytime you need to. But looking forward to next Money Monday. If you have any questions, I'm here. Drop a question, let me know. I'll see y'all next week. Bye. Thank you guys for coming.